Hello, good morning, everyone. Welcome. All right, Darren, what's up? Your news, JR, Richard, J Stores. What's up, everyone? Oh, you already getting them, J Stores? Right, so now we have our midnight and our 8:30 open plotted. Now the next thing I want to do is look and see where my session opens are. I'm sorry, my session highs and lows. Right, so we can see here, there's the Asia high, clearly traded through. Asia low, traded through as well. Let's see, London. London low, traded through about 45 minutes ago. And the high also traded through. So no session highs and lows available at the moment. All right, so our day yesterday, since anyone who was here at afternoon session and stayed until the end, you saw the big the big drop that happened at the end of the day at about 6:05 or so, maybe in between. I'm sorry, not 6:05, 16:05. So in between 4 o'clock and 4:05, we had a big, massive drop, and so we ended the day at the low of the day. So naturally, so as soon as we opened, basically, the low of the day was already taken and gone. So we may have a high of the day to trade into today, but we'll need to start pushing it higher fairly quickly if we're going to get there. Move our session highs and lows, since we know we don't have any. We have the London low, and this is from Tuesday. Okay, so from a couple days ago. So let me label this properly. If I'm not mistaken, I think that day we left all the lows open: London, New York, and Asia. Here's April 23rd lunch low. It's Asia low, so it's most likely the same day. No, it's not. This is Monday the 22nd. And so is this. So I labeled it wrong. All right, so we have a few levels just below us from earlier in the week, as well as last Friday's low, not traded back to. Okay. All right, so we have 4 levels on our chart here marked up. We also have the new week opening gap, so we're getting back to the opening value of the week. Trading below this obviously will give us a bearish candle for the week, staying above the bullish candle. 1 hour busy. January, okay. Okay, this looks like top edge of it, and this looks like consequent encroachment. So let's go ahead and stretch this across. I went back yesterday after our session, and I pretty much marked up the chart for everything that I saw for the day, put in some notes and copied it and said, this is a day that I want to study. Just because of how many unicorn setups there were and where they were, how many times they got played into. So we had a unicorn setup here for a short, traded through while validating this breaker, hit the day before's bullish unicorn, at the same time creating a new one for today if you wanted to use that one, while also inside of a 1 hour order block, which I labeled here, coming from previous day. So whether you like trading order blocks or you like trading unicorn, it gave you so many entries here, traded back to this breaker that was validated on the move down. Also traded into an OTE if you like to be an OTE trader, traded out of it back into an OTE, creating a 1 minute unicorn, but also retracing back into the 5 minute for a second time, trading out of it, hitting an OTE of this price leg, while at the same time creating a 30-second unicorn that, without much drawdown, saw the price just fall. So I just saw several opportunities depending on what your trading style is. If you trade any type of smart money concepts, there were plays for you to take yesterday. Even a new day opening gap played a role when we got to the end. When we didn't have a fair value gap or anything on the 1 hour, the new day opening gap provided that kind of resistance, which then saw price fall. So I just marked this up and copied it and put it into my journal as a day to come back and be able to review all of this after I've deleted it or forgot which day it was. Forever, I'll always be able to review this day as a day that had a lot of different entries, a lot of different things happening, but one to learn from. All right, let's see where we are today. You know what? Let's start off with our calendar. We had 2 red folders announced already this morning with also a medium impact folder. Okay, advanced GDP quarter over quarter, much lower than forecast. What happened there? Unemployment claims came in slightly better than forecasted. Not a lot, but I guess 7,000 better. Advanced GDP price index quarter over quarter is a tenth of a percentage point higher. So I would imagine this has the biggest impact. So the dollar should be falling, is my guess. Let's see. Inflation adjusted value of goods and services produced by the economy, actual greater than forecast, is good for currency. All right, we're well below forecast, so that should be bad for currency. All right, let's now take a look and see what it did to currency. It looks like a mixed bag. There's no candle body here. There's a huge swing up, big swing down. And so far, price hasn't produced anything. So we'll see what the opening bell brings for the dollar, and we'll react to that. But we do see that it's reached a pool of liquidity, these equal highs. It was able to run last hour, reject out, and run even higher this hour, and then reject lower. And we also see that we're pushing lower for all the indices. So we have the Dow, we have S&P, as well as Nasdaq. They all have rejected out of bearish fair value gaps above that were created during, looks like impulse this morning. No, I take that back. They're creating one that was from the impulse this morning. The one that they were rejecting out of, at least the S&P. This is one that's coming from yesterday at 1600 at the end of the day, as well as Nasdaq. So both of them have that issue, and it's probably because yesterday Meta or Facebook was the one who announced their results, and they're definitely on the Nasdaq, but they probably are also on the S&P, which is why they both had the big drop at 4 o'clock. All right. But what we do see is they are now inside of bullish hourly gaps here. So they could find support and start filling in some of these gaps that's just above. Now the Dow is not inside of one at the moment, but it does have one that's a little bit lower than where it is now. So if it trades down a little bit lower, it'll hit the same type of support area. which could send prices higher. Right, put my mug back up on the screen. Let's see who else we got. Robin, good morning. Hey, Darren says we're at a pivot. Sniper, what's up? Nasdaq live stream. It's an interesting username. It's healthy. Yeah, Milad, good morning. How's it going? Hey, Chuck, Eddie, what's up? I'm just following market structure now, trying to find my high and low. So market structure is broken here. It's opening bell is about 30 seconds ago, so we're already in the game now. Ketty, Math Genius, what's up? We filled the regular trading hour gap on Tuesday open. Okay. Oh, is that what we did this morning? Got it. Let's see. But we have a nice one here, though. 17,540, and now we're at 350. So we got almost 200 points to build back through if we're going to close today's regular trading hour gap. No, I didn't. GDP did not look good. But that should be bad for the dollar. So we're looking for an inverse relationship here. And we find ourselves inside of 1 hour fair value gaps here, bullish ones. So we still have a few levels from earlier this week that we're taking now, like this April 23rd London low. We have an April 22nd Asia low just below, as well as another April 22nd, the lunch low. So I don't know which one of these is going to find support on. We also, we took a look at the charts this morning on a higher time frame, and we found that we saw the new week opening gap right here. So we were right back at where we started Sunday evening, 1800. So let's see where price finds its footing, get some support, and see if we don't start digging into that regular trading hour gap for today. Yep, spending has slowed. You're right, which is, I think, a good thing. Yeah, I agree. It's long overdue, and we probably hadn't seen the worst of it. Well, JSTOR's a good thing is we have a profession, or we're building towards a profession that will get paid whether the economy is going up or down. Oh yeah, I'm also looking at the 1 minute. I see what you're saying. These last two candles. All right, so now the Dow has made it down to that bullish fair value gap that we saw. It hadn't quite reached yet, even though we saw the S&P and Nasdaq were both inside of the fair value gaps already. So now we have all three indices inside of a bullish 1 hour fair value gap. So just in case they find support and want to push out of it, let's be ready for that. And remember, we did see the dollar hit buy side liquidity, so it could turn around at this moment. But the dollar also has a bearish fair value gap on the hourly chart above, so it may want to push a little higher and get in there before reversing. But one thing's for sure, the news that we saw this morning, the news that was released at 8:30 was not that favorable. Now we do have another news event at 10, so let's keep that in mind as we're looking for setups over the next 20 minutes. In fact, let me remind myself, what is that news event? Pending home sales, and it's shown as a high impact event. So we'll check back in. That actually might be what drives the price action that I'm talking about. All right, equal lows down at 308, 17,308. HCE, what's up? Good morning. There's me sweep Tuesday low at 285. Okay. Lost 487 on Monday. I don't know how to get up. There you go. Good advice, guys. Gospel Trader, good morning. Mike. Yep. So look for a breaker block to form inside of this fair value gap. Look for it to form inside. We can almost see it right here. Right. So you got a low, you got a high, lower low, and now you got a higher high. Right. Closure outside and a retest. This stop loss is too large for you. You're going to look for the 50% entry. You're going to have less likelihood of getting your order filled. But if you do get your order filled, you'll have a smaller stop loss and you'll feel more comfortable in the trade. So if it doesn't work out for you, always just wait for the next trade. Mhm. Okay. Yeah, no problem, Robin. Yeah, these are the ones that you learn first, and it's easy to pick them out because you have this long um, downwards trend here. So when it flips, it's easier to see. I agree. But yeah, I'll point out the ones in the middle as well. All right, we got the macro starting in 2 minutes, and then we have high impact news 10 minutes later. So let me go and refill my coffee. I'll be right back. All right, we're inside of the macro now. We'll go down to the 1 minute. Good morning, Caesar. What's up? All right. Break even after 40 points. Okay. You want to short it, snipe? Okay. All right. Still no movement from dollar. It's still sitting right on its opening value for the hour. So he has the big wick above and the big wick above below, but still no movement. It's still sitting in the same location. While we're seeing lower values on S&P and Dow. However, NQ looks pretty stable. Everyone, remember there's high impact news coming in 7 minutes, a little bit less than that. At the 5 minute. Okay, so we did get. There's the unicorn does have a fair value gap built in there as well. Yes, that is correct. 940. So the entry point is anytime after the fair value get, I'm sorry, anytime after the breaker is confirmed, meaning traded above and closed. So that would have been the 940 candle. So yes, the 945 candle, when it retraced and traded inside, that would have been your entry candle. But now we have another one coming in as well. So to the same point, they'll give you an extra opportunity. Just need to keep in mind we do have news coming at 10. So just decide whether this risk fits your trading profile. And then you have a pretty large fair value gap here. So you get to decide where you enter, whether you enter at the top, the center, 2 minutes before news. All right, here we go. It's opening this hour, pushing higher. We have all the indices pushing lower this hour. With the Dow and S&P sweeping lows from the last hour. However, Nasdaq is not taking out the low from last hour. It's just about halfway down the wick, holding firm. Robin, is it a failed setup? if it closes below on the 5 minute, then technically it's a fail breaker. Yes, but it could still work out at a later candle. But yeah, technically it would be a failed breaker. And sometimes what happens is these candles that dip below the breaker that help form it, uh, price will trade into those candles. So you'll see it dip down and trade here, and then it'll still go. Yeah. Right. So let's see what the news brought us. Pending home sales, 3.4%. The forecast is 0.3. Wow. How far off were they? Yeah, that's true. Good point. There it is. I should have waited. I closed my trade with 30-point profit. Couldn't hold it till end. The 4-hour breaker. Okay. Got it, math. Damn it. That would have been my trade. End up getting half of it. It's all good. We'll come back for the next one. All right. Robin. So Robin, when you're doing your back testing on breakers, you will see this happen quite often. Not every time, but you will see it poke through the bottom of these breakers. Just it won't close below. And those are still valid. But if you have your stop loss right on the breaker, then yes, it'll stop you out. So that's why, so I mentioned when you're looking at the breaker, you look at the full range and you decide whether you can absorb a retrace all the way through. And if you can't, then you wait and you take an entry at the consequent encroachment level or at the fair value gap that's inside the unicorn. If that's still too large of a range, then split it into quadrants and take an entry on the lower quarter. Because that's what I ended up doing. I took one at 50%. And when it was trading above over here, I moved to break even and it stopped me out. And when it came down here and it started buying up, I took an entry down here somewhere and it moved up. I moved to break even and it stopped me out and it went a little bit lower. And when it started moving back up, I took another entry down here. And so that was the one I was able to get out up here for 30 points. And still I'm barely above the breaker because it was just still bouncing back and forth. But ultimately, I wanted this one. I wanted to get to 410 was where I wanted to take the take profit. But I wasn't able to hold, so we'll see if I can do better on the next trade. Yeah. Yep. So for anyone who took this trade, congratulations on being able to hold and not get stopped out. Or if you did get stopped out and you got back in, congrats on that. So now we're kind of in a crossroad here, right? We have this big bearish fair value gap created from all the momentum coming downwards. And then we have the bullish one that was created several days ago that we're now finding support in to push out. So we'll keep monitoring price to see where we are. But again, congrats to anyone who caught this breaker here. The only thing that really made me nervous here is that it's the breaker or the unicorn setup during the macro at a high impact news release. The high impact news release is the only thing that had me nervous because that's something hard to simulate when you're back testing. I generally, when I'm back testing, I don't go back through the news events and apply that to the candles I'm looking at. Robin, another thing I noticed that could help you in these situations is, so when we saw this breaker forming, what happened a lot of times is you'll see the breaker form, and this candle right here will buy up, but it won't close above. It'll close back inside the breaker, so you'll just have a wick above, and then you'll see the next several candles start trading down, filling in this range here, balancing price. Then it'll finally trade out and close above. When those happen, then I already consider this area filled and balanced price. And so when it does finally break out and close above, I don't worry about this anymore. But in this case, it traded below and immediately traded above and closed above. It didn't play around. And so because of that, this whole area here hadn't been filled after it was traded above. Because remember, whenever you get a price move that takes a previous swing point, it's the candles before it that they consider the ones that made that propulsion happen. And so this price needs to be balanced. So it ended up coming back down. That's why you usually will see me do this whenever we have a breaker set up, because I'm accounting for a consequent encroachment of this price range, this leg, the manipulation leg. And you can see where price dipped into it twice. Okay, sniper. Got it. Perfect. Okay, Richard. Yeah, it takes some patience. And the more times you don't hold and then you watch it run away from you, it'll make it easier next time. Wow, and look at price now. Look at this. 426. The breaker entry was 366. The entry I took was really right around this consequent encroachment area, so 737. And now we're up 100 points. So that would have been $2,000 on one mini, or $200 on a one micro. Oh, you got in early? Okay, Richard. No problem. We'll keep working on this. I'll keep pointing them out, and you guys decide where you want to take them or where you want to enter at. But again, I think this breaker was 366, 333. Yeah, so it was a 33 point breaker. And so if that was too much for your risk management profile, then yeah, you would have needed to take an entry somewhere around the middle. But again, this one was a little bit different and a little bit more difficult because of the news announcement at the same time. So yeah, don't be too hard on yourself. This is textbook. This is that one setup you take and then your day is over. Yeah, what was nice about this one is the middle of the fair value gap is also the middle of the breaker. It split it perfectly. WC, good morning. What's up? HCE, you said, would I mind going over the breaker setup and possible entries again? Okay, sure. Sure. Make this a little larger. All right, so we're on the 5 minute. Back, let me see. All right, so we're not even breaking structure until we get up here. So we still got a ways to go. And this yellow area, new day opening gap from today. So we'll see if that restricts price or price just barrels through it like it wasn't even there. We'll see. But yes, so what is it? HCE. Let me draw this up. So remember, we're inside of a 1 hour bullish fair value gap. It's a bullish fair value gap. So we're looking for longs out of this area, and we look for the breaker to form inside the fair value gap. It can form above as well, because what that means is this area is going to support price. So if the breaker is formed up here, just above, like let's say this pink area wasn't here. If it's formed just above, then you just rely on this fair value gap to support price. It even can form below. But I usually look inside. Once price get inside, and as Queen says, you start scouting breakers so you don't get left behind. And that used to happen to me as well, is that I'm just watching price, and then eventually something happens and I'm like, oh man, there was a breaker. So once it gets in here, you start scouting it, even over here. So you see a low, you make a high, you made another low, and now you're looking for a high, right? And instead it made this high, but it didn't go high enough. And then it made this low. So you got to reset. Oops. So once it made a new low, then you go back and you reset and you remarket. And then we finally got a move that moved first below this low, and then a move that moved above this high. And the body closed above. So that's a confirmation that this breaker is alive. Then all you're looking for is a retracement, which happened the very next candle. It traded back inside. Now we did have news at 10 o'clock. So we had a bit of a stronger retracement, and it kind of bounced around for, these are 5-minute candles. So this was 25 minutes here that it gave you an opportunity to get in, but also it gave you an opportunity to get scared out. But it was a 25-minute opportunity. Price traded below the breaker just a bit, twice on back-to-back candles into the manipulation leg, but just past the consequent encroachment of that leg. So this would have been an area that you would have wanted to see price trade to. And once it did, you'd have felt comfortable that now price is balanced and it can then go higher. So HC, sure that was what you were looking for. But the entry could have been at the edge, upper edge, 365 or 366, whatever that exact number is. You also, since this is a unicorn, we have a 5-minute fair value gap here. So you could have traded at the top edge of the fair value gap at 353 at 50% level, which is 350. Or you could have traded the 50% level of the manipulation leg, which is 337. Those are all possible entries. So if you had, let's say you're doing micros and you want to trade 3 or 4 micros on a trade, you could take one entry right here at the top. If it trades down into consequent encroachment, you can take another one. And then if it continues lower to consequent encroachment of the manipulation leg, you could have took your third entry here and had 3. So by the time it started building up, you'd have had an average entry somewhere in the middle. And now you got 3 micro contracts as price is moving out of the breaker. Correct. In adversity, the breaker should form somewhere around a higher time frame PD array that sends price in the desired direction. So in our case, since we trade off of anywhere between the 1 and the 5-minute, then we use the 1 hour to direct our trade. Oh, Dakota called it? Okay. So the TP, it really depends on you. Through my back testing, I seen that pretty much every 5-minute breaker delivers 30 points. So you can take 30 points as a TP, or you can assess it off of your risk. How much risk are you putting in to win this trade? So it depends on where you're getting in at. If you're getting in at the very top to survive the trade, you need to make sure that at least you have a stop loss at the bottom of the breaker. But I also mentioned that you need to account for this manipulation leg as still an area that price can trade to prior to taking off. Sometimes what you'll see is price will trade up 30 points and then it'll come back down and take out this area. So you'll see it trade down here and then you'll see it go one more time and then it'll finally deliver what it was supposed to. So all of those scenarios are possible when you're doing breakers. So you get to decide how you want to do this. But if you do it off of risk reward, right, based on how far down you need to put your stop loss, which in this case, to win this trade, you really would have needed to be below this wick right here. And we can see that's a 45-point stop loss. I think the most profitable trades, or the trades that are most likely to work out in your favor, are one-to-one trades. So if you need to hold a 45-point stop loss, then you're asking for a 45-point profit. So, and that's if you're getting in at the most conservative or most aggressive level. This is the most aggressive level at the very edge of the breaker. If you're able to be a bit more conservative and say, you know what, I'll take it somewhere down the middle because the breaker is too large. Now you're at a 28.5, so you can either reduce your stop loss down to the 30 points I talked about, or you can go for a 1 to 2. And what you want to do is you want to look to the left and say, okay, what could hurt my trade? Where could price turn around? Right? We have a bearish gap here. Then you don't have anything until you get up here. Right? And since the breaker's forming here, I wouldn't be extremely concerned about this. And we've already traded into half of it on this candle. So this has been partially balanced already. So I would expect price to push through here and maybe get stuck here. So you're already talking about, you think your price can run about 100. Right? But also being aware that you're inside of a big bearish fair value gap. Right? And since now that we are past 10, I need to look at my New York levels. Okay, obviously we have the New York low being put in at 930, 935. So we have that level. Call this the MI low. Right, and we have the New York high well up here. Right, so knowing that let me just remove this. All right, so knowing that this fair value gap has already been traded at least halfway through, the next one is not till all the way up here. We have a new day opening gap, which price likes to trade back to several times throughout the day. We see that as a possibility. We also know that the New York high is up here. We know that the protected high is right here. So we don't even have a market structure shift until we get up here. And we have the midnight at 8:30 open in between. All of these are price magnets. So while you're looking at price to build up out of the breaker, doing a 1 to 2 trade or getting 30 or 40 points seems highly likely. I'm sure that was probably more than what you needed, but in hindsight, those are all the things that I see. Obviously, while the trade was happening, I couldn't see all of that. But that's what you're able to see when you go back and practice. All right, laughter, good job. Oh, really, Richard? That's amazing, especially with how new you are to this discipline. To have be able to see the breaker forming independently now. And then I know you can see a fair value gap. So you're able to see at least this type of example. You're able to see the unicorn, which is amazing. So good job, Richard. Now you just need to, next time you're in a back testing session, just start looking at, okay, how much does these setups deliver? How much can I expect every time I take it? All right. Oh, and another thing, before we started the session, we had just talked about the regular trading hour gap and how massive it was based on how price did a big drop yesterday at around 410, 415. That's when the regular trading hour stopped. But afterwards, it kept dropping, and into the overnight session, it was still dropping. So it creates this huge gap that we need to trade back into. So that's another reason or way that you could feel comfortable once you got into the breaker setup that it was going to deliver. If we just take price trading into 50% of it, which is exactly where the wicks are now, 448. And our entry at the breaker was 365, or if you took one inside of it somewhere in the 340. So you're talking 100 points. Yeah, definitely. Ash Trades, he makes it pretty simple to understand the concept. And then it's just, yeah, up to you to go back and see 50 examples of it. See, where are we? Well, this is a return back to origin is what this is. I'm not sure if it's buy opportunity or not, but the question came, is this a buy opportunity? So Wei Yun, this is what you're going to have to do, right? So we can see this was the support that launched price higher. So just like when price traded down here, we started looking for breakers. You're going to do the exact same thing, right? But you're less likely to get another breaker to form on the 5-minute because we already have one. So in this case, if you think this is a buying opportunity, you want to drop down. So go down to the 1-minute, go down to the 30-second if you have that option, and look and see if a breaker forms, because it's going to do that. If the price trades down here, you're going to get a break on a really low time frame here, which is going to support price moving back to the upside. And then you want to go and find that. Let's see if we get another slight push downwards. Sweeping this low. If we get something trading below 377.5, then you can start hunting and seeing if price wants to buy up again. But it clearly missed each of these fair value gaps. So if someone was looking for a silver bullet as a long, those, well, first of all, it would have been too hard to put a stop because your stop should go below the previous candle of the fair value gap. So if this was the fair value gap you were using, your stop would have had to go down here at 357. So in that case, I wouldn't have been looking for a fair value gap here because you're talking about a 50-point stop loss. So I would have went down to the 1 minute or something smaller and tried to look for it there. Well, the equal has it 308. Relative equal lows, I'm assuming. Breaker on the 15-second. Okay, J Stores, that makes sense. That makes sense. Okay, I was about to say, I was like, oh, 7.5 minis. Jeez. But I know you can do 15. Oh, it's your Apex. Okay, got it. All right, return to the breaker now. We've already had one major push out of the area. We could get another one, but each subsequent attempt is less likely than the previous. Oh yeah, keep grinding away. Check that out. Just curious, how many people hopped into this breaker here? I did not, so I'll just put that out there. Oh, you did on ES? All right, Sean. Yeah, J Stores, you're right about that. But that's not bad though. If you're doing it on 7.5 minis, which wow, so you're talking about every point is going to give you like $150. You just gotta say, hey, give me 4 or 5 points, and you walk away with 750, $800 or whatever. And that's a really, really quick trade. Mm, that's key. The 150, the 5K trailing drawdown. You're more likely to get the 4 or 5 points up than to get 30 points down or whatever that translates to. Yep. So you make sure that you don't get stopped out. You rarely get stopped out. But you're just continuously adding to your account. Yeah, well, it's like a $2,000 account, but they only let you use 50% at a time. All right, I'm going to go and refill my coffee one more time, and I'll be right back in just a couple minutes. We got the macro coming in 3 minutes. selling. Right. Let's see, where are we on the others? All right, so we got the dollar pushing much lower this hour, so it's quite strong actually. But we also have the indices pushing as well. We're on Nasdaq. We're at the opening value, which makes sense because we were in the breaker at the start of the hour. We're at the same place in S&P at the same place we were at the start of the hour, and the Dow is pushing lower. So the Dow is definitely weaker, the weakest of the three. We're still in a bullish fair value gap until we get down to 17,300. So there's about another 50 points to go before we're out of this range here. But we do have equal lows down at 308. And so let's be aware of that. But while we're in this area, if we do see something, a pattern that turns around or starts to show us a bullish pattern, we do want to be aware of that and consider taking that setup. Yes, I usually have the, Richard, I do have the 830 usually charted, the 830 and the midnight. Those are the two values I always chart. All right, so we've had 6 consecutive minute candles sitting right here, consequent encroachment of the fair value gap as well as the breaker. Right. Right. I'm sure there's somebody in the room who took this long once they saw price stalling here at the consequent encroachment of the fair value gap as well as the breaker. So this unicorn setup right at the 50% showed support. And I know there's somebody who took this long. Who was that asked? So what do we do now? Wei Yun. I think it was Wei Yun who asked. Oh, look at that. Unbelievable. Wei Yun, remember when price was breaking down and I told you that since we're on the 5 minute, it's not going to create another 5 minute breaker. So if you want to know if you can get in this breaker and take it again, you're going to want to look at a lower time frame and find a breaker there. I don't know if you have the upgraded trading view, which allows you to go below 1 minute, but the 15 second is where price stabilized and gave you a breaker. So we had 1, 2, 3 equal lows here. And then we had price break below. So we had a break of, well, basically liquidity taken. Based on that, this became the breaker. Right. And you just waited for price to trade and close above, which you did on this candle. 10:59 and 15 seconds. It was inside of the macro period. So that's also another confirmation. And then you're just waiting for a retrace back in, which you got 1, 2, 3 candles, and then it was out. But I realize a lot of people have the free version of TradingView, so you won't have access to below the 1 minute. But that just means that this one trade here is one that you wouldn't have been able to participate in. However, you easily could have gotten into the previous one an hour ago. Oh, okay. There you go. So anyone who doesn't have the upgraded TradingView, if you are trading with Topstep, you can use Topstep's platform, which is, from what I understand, very similar to TradingView, and it gives you access to the lower time frames. $366. All right, so it delivered 25 points to 391 on this second go. So far, it's delivered 25 points from the very edge of the breaker. However, if you were looking at consequent encroachment and taking an entry from there, you've gotten 42 points already. Yeah, Sam. I mentioned that they could, if they had a TradingView upgraded package, that they could see those lower time frames. But if they had a free one, they would not have that access. All right, everyone. If you're enjoying the session this morning, if you can hit the like button, please. We got another hour on our session, but I want to make sure that YouTube understands that our sessions are being appreciated by the viewers here. Let's get back up to the 1 minute. Sorry about that. Okay, Miss Healthy took the long. All right, excellent. All right, we are 10 minutes into the new hour. Let's just take a quick peek. While we look at the next hour just to see where, where the indices are trading at. Right, so we can see some level of support being built here for S&P. And opening 10 minutes of this hour, you see it's already pushing out of the fair value gap there. Trying to at least push to recover the values from traded last hour. It's already made it to 50% of the wick. Now on NAS 100, we have not made it to 50% of the wick, nor definitely not to the top of the wick. So we've just barely traded out of the fair value gap. However, so far it's been rejected by the bearish fair value gap that's just above. You can see the wick touched it and then it started pushing back down. All right, and if we look to the far left of the dollar, so far, so we had almost a push through the entire bullish fair value gap. Did not invalidate it. In fact, it retraced back to consequent encroachment before the hour closed. And now so far it's kind of indecisive, just up and down so far for the first 10 minutes. What we want to see is that if it's selling, obviously the power of three, it's going to buy first. That's going to be the first move, is the false move. So the fact that the dollar has been pushing up the first 10 minutes, hopefully that means it wants to push down for the rest of the hour. All right, so we'll bounce back over now. JR, yes, it can be used multiple times. Um, I don't know if the opposing breaker has, it's the reason why it can or can't. But obviously the opposing breaker would be where you'd be TPing out and closing your long trade. But yeah, it can be used multiple times. Just make sure you do what what I showed earlier, is that instead of just blindly taking it a second time, go down to the lowest time frame that you have and look and see if you see a breaker formed inside of this range. You're only profitable in short scalps. So when you try to do for full setup, so when you're not scalping, got it. Appreciate you, Richard. Let me see. I think. Are you? What type of stop losses are you using in adversity? Do you think it's your stop loss placement that's closing out your trades, or is it just you're missing the direction, or you're missing something else? That's not a bad advice either, Sam. Just stick with what works. But if you do want to take longer setups, you're definitely going to have to use different style stop losses. So I know that's part of it, but what do you think is holding you back? Oh, okay. All right. Well, let's start there then. All right. From what I've noticed is that almost everything works. And let me go back to my example from yesterday. Oops. All right. So there's a lot on the screen here, and I apologize, but it made sense to me, probably because I drew it. But anyway, what this chart really showed, and this is yesterday's trading range from 8 o'clock in the morning until 4 p.m. over on the right hand side, right? But what it showed is that you can be an OTE trader, and you had this entry, you had this entry, and you had this entry. You can be a breaker trader. You had this short. If you didn't catch that short, you could have caught this long. If you didn't catch that long, you could have caught this short from the breaker. If you didn't catch that short, you could have caught this long from the breaker. If you didn't catch that long, you could have caught this short from the breaker. So, and then if you're an order block trader, this purple outline from here to here is pretty big, but it's an hourly order block coming from back in January sometime. Price traded down, hit the consequent encroachment, and out. And this was the lowest of the low that created the breaker. But so if you're an order block trader, you're in before the breaker traders got in. But what this is showing is that if you're either of these three kinds of traders, there were multiple opportunities for you throughout the day. In fact, right here, we have OTE. There's a 5-minute unicorn. And this 1 hour order block, it tapped inside by a couple ticks. So any of the three of those style traders got in on this one entry. So the point I'm trying to make here is pick something that speaks to you, pick something that you like, pick something that you can see, and become good at it, really, really good at it. But just stick to that style. Trying to trade different styles on different days, it's not going to work out well for you, or it's going to stunt your growth and take much longer for you to master any one. Splash. Yes. If you're able to see all three of those at the same time, absolutely. You look at that and you say, okay, well, everybody's in on this trade. So I can go, now I'm not going to go full tilt and throw in everything I got, but yeah, you can definitely size up on those trades. Hey, Queen, good morning. Welcome. Hmm. Yeah, I mean, the VWAP traders are winning. The EMA traders are winning. You name it. Every trading style is winning for someone. And it's the person who has learned to master that trading style and to know exactly when that trade is likely to go to TP and when that trade is likely to fail. Yeah. Um, HCE, you can. So what you want to do is you want to pick a time frame to back test. When do you see the setups forming? And so what that's going to do is during your back test, excuse me, during your back testing, you're going to be able to see how likely is this trade to work out for me. So if you like, let's say you like breakers and you like the 1 minute, so you're going to back test on the 1 minute and you're going to look for every time the breaker forms, moving in the direction that you want it to go, and see how likely is that to get to 1-to-1 TP or 30, 40 points, whatever it is your TP is set at. And then you go from there. That's what gives you the confidence to take the trade and hold the trade. I like the 5 minute, so I back test on the 5 minute. However, I will take a trade between the 1 minute and the 5 minute if I'm in a zone where I'm expecting the 5 minute to show me a breaker. Like if I'm in a fair value gap that's created on the 1 hour, so that's the staple for me. That's the standard. The fair value gap on the 1 hour, or I'll even go higher. So I'll take a fair value gap on the 4 hour or the day as well. Just remember that those ranges are larger, so you gotta still refine them so you don't have a 100-point stop loss. But I would say whatever time frame you want to take your trades off of, that's the one you have to practice. And just remember, if you go up in time, your confirmation should be stronger. If you go down in time, you're less likely to have your trade work out for you. So if you like the 1 minute, but you see a breaker on the 5 minute, just know that that's probably stronger than the 1 minute one that you like. So you should feel really good about it. Triple C, good morning. What's up? All right. So 5 minute chart, 835. Is that a bearish breaker? No, it is not. Mhm. However, this is what you want to look at. You want to watch this one because you're on the 5 minute. You see, like when we were starting to trade lower and then it traded higher and just kind of was in the range. We were trading lower and then we had this dip above these levels. So I would look at this as price was then starting to break down. Take this range moving lower. When price gets back up to around the 8:30 open or the midnight open, go down to a lower time frame and look and see if you get a bearish breaker setting up in here. If you're looking for prices to move lower, that's where I would start. Now, if we lose this level, these equal lows, and you see price trade below and close, then obviously when you start seeing price moving lower, then you start looking for a breaker over here. Because if you have one, when it trades back up, it's going to break from here down and it's not going to make it back up here. But while we're trading up and we're moving back up in that area, watch this area. And this one's important also because it's inside of a new day opening gap. Remember, the new day opening gaps where price likes to return. We have that. We have the regular trading hour. We still haven't filled it in yet. So we do have this area we just identified as a potential bearish breaker, but it's not at the top. So that's also something worth considering, whether price will just tear through it, reach the upper extremity here before wanting to then show that it's bearish. So again, everything is sort of relative. You still want to see the signs. You don't want to take blind entries in any location. You always want to still see the pattern form. You're just looking for it in certain places. Oh, you're long in ES? All right, low. Good luck. Yeah, Miss Goody, just stick with it. Stick with it. We all have losing trades. Okay. All right, Splash. So you're up 25 points right now. All right. So far, it's given 25 points 3 times. The first one was this entry around 950. Anyone who took an entry down here or anywhere in the breaker, it delivered this much. Traded back down, hit consequent encroachment, pushed out and delivered, I don't know, 30 something, 40 points. Traded back into the breaker, gave him the third entry, and has already pushed out 25 points. The one I was just showing you, that was from yesterday. I marked it up when the session was over. I mean, this right here. Yeah, these are my notes. I typed them in and I drew all these boxes, and it was super ugly and you couldn't see anything. So then I had to make the boxes clear with just border colors. But yeah, these are my notes. So I have this one saved as a as study material to just see how often each of these are playing out, how they're overlapping, and depending on your trading style, how many entries you can get in a given time period. As well as if you miss your entry, where could a secondary entry be? Yep. I'll tell you what, I will cut out this and I will dump it into the Discord. So you'll be able to see just this and you can save it and open it up yourself. So after this session is over, check out the Discord and I'll have it in there. Mm-hmm. What was interesting for me is one of the first strategies that I learned was the optimal trade entry. So that, you spend a lot of time looking at that. And then once you start learning more advanced skills, whether it's order blocks or breaker blocks or whatever else, kind of stop paying attention to the optimal trade entry. And it was interesting to see that every time yesterday, price traded right back into it. I bet it did here too as well. I'm just looking at it. See, once again, optimal trade entry. No boundaries. Go into my description, the description of this video. Just go into the description and you'll see a link that says like social media / Discord. Click on that link and it'll give you the opening to my Discord. Okay, he told why it happens. Got it. Okay. Right, you had that. You have a 5-minute fair value gap. So look at the overlap. Fair value gap at the optimal trade entry. Go from here, there. Retrace down, optimal trade entry to the tick to the bottom of it. Overlapping the breaker. So when I looked at this, what I was thinking was that I need to backtest and start to try to reverse engineer this, because if the breaker falls back, when price breaks out of the breaker and it puts an optimal trade entry at the breaker location, then what that's telling me is when the breaker is formed from the top of the breaker to the low edge of the range, so the manipulation leg, that's about 40% of the full leg. So if I can learn this, if I can see this often to where it's always happening, so I can't confirm that the OTE always forms inside of the breaker, but if I start to see it often, then I'm going to know that the low ended extremity to the top of the breaker is 40% of the leg, which then allows you to measure where you can get out at. All right, low 8 handles on ES. Sweet. $400. You're on minis. Rid of the Fibonacci and see if it looks decent. If it looks decent, I'll leave the OTE and things there. But if it's too much on the screen and you guys can't really decipher what we're looking at, then I'll get rid of it. Okay, so this is similar to what we saw yesterday. Let's now check out this. Ooh, sweet. Yep. Yeah, I agree, Queen. Once it's already delivered a good amount on that first run up, that second run might deliver something, but I also have less confidence than the first one. But sweet, 45 handles. Nice. All right, Mike. Now we can see even on its most basic level, prices reacted in the OTE on the 3 price legs from this morning. So we had a big price leg from 8:30 until the opening bell. It traded to the OTE of that leg, turned around, ran into a 5-minute fair value gap that was created going down at the OTE level, flip, traded back into the breaker. Found support in the fair value gap down here, right at consequent encroachment of the breaker, which was also OTE of the 9:30 to 10:30 price leg. Bought out of that, delivered another 40, 50 points into OTE of the retracement from 10:30 to 11. Oh, you got a good break in London? Okay, sweet. Yeah, I'm right at my goal for the day as well. So I'm sitting here and contemplating what I'm going to do. And that was still with cutting both of my entries this morning short. Because if I didn't, I would have met my goal on 1 trade, not on 2. I see. Yeah, we're waiting to see if this right here turns into a breaker. Well, actually, it is a breaker. We're waiting to see if it returns to it so you can trade out. So this could be your breaker to breaker trade in between these two. All right, J Stores is back. While we're waiting, we got about 10 minutes before the next macro. Let's take a look at where we are on the 4-hour chart. Let's get rid of the lipstick here. All right, so we have on the 4-hour, we have a bullish fair value gap here that was created starting 17,361 down to 17,342. So it's right here. Created Tuesday, I guess, in the London session basically between midnight and about 6 in the morning. Price traded down, and so far, both candle bodies are sitting right on top of the gap. It did trade through with a wick. The candle bodies are sitting right on it. Granted, this second candle, we do have another 2 hours and 20 minutes. So until 2 p.m., this candle's still trading. But around 2 p.m., if we see that these candle bodies are still sitting on this fair value gap, that may give us a little more confidence that this level is support, and then we'll see these highs fall. See the 1 hour. Yeah, so 1 hour is very bearish here. But we have this candle and then 2 more 1 hour candles before that 4 hour is closed. So we'll keep paying attention to those, but I just wanted to bring that up while we were waiting on the next macro period. Let's go back with the drawings. There we go. Yeah, I know, Miss Healthy. I know. I Yeah, my wife's been giving me junk about that. Whenever she sees me with a non-white t-shirt, she makes a point to praise me for not wearing a black t-shirt. But but honestly, I just like my black t-shirt. I like to have essentially a uniform. I have a outfit that I know that I'm going to wear. That's it. I don't know how many black t-shirts, but that's just what I like wearing. At least for the stream, I want that to be my sort of my look. Oh, that's what Queen was saying. She liked the blue. I thought you were talking about something on the chart. I was like, I don't know what she's talking about. The blue. I didn't realize the shirt. Thanks. Sure. Triple C. I will let you know when I take another entry. But Triple C, if I take an entry off like the 15-second or something, I'm not going to tell you about that one. So you're just going to have to miss it. Maybe one day when we get some more subscribers, maybe we'll do that. But first, yeah, I would have to design something for myself. Oh, you wear mostly white tees. Okay. Yeah, I have a lot of white tees, and especially, I mean, living in Phoenix where it's always sunny outside, I wear quite a few white ones. Um, yeah, they're just very fragile as far as stains and things, so it's hard to keep them clean. Anyone still in the long from the last breaker entry? 11:30 or 11:15. So we had one big entry. We had a second one for about 40 points. And another one for, let's go with 365 up to 400. So another 40 pointer. Trade back down into the breaker again. 365, and we're already up to about 400. So we're all the way up to 35 points on the fourth entry. Yep. Hometown team. Yeah, I usually catch them on sale and go and get 4 or 5 of them. HC, you move your stop. Okay, got it. Um, I can understand why you would do that. Honestly, just because it's tapped this level so many times that, we're not, like I say, every time that it taps, it's probably less likely to do the run that you would expect. But we can see that this morning has delivered at least 35 points 4 times. Yep. Well, we got 5 minutes and the macro will get going, and it'll be the setup for the lunch hour. Right. And the fact that price isn't just running up, I'm not sure exactly where it wants to go, but it may, this may just be sort of a consolidation before a continued push down. But obviously, we'll check on the dollar and see if that supports that narrative. Anyone interested in learning this breaker block or unicorn setup and you haven't checked out Ash Trade's playlist yet on YouTube, I highly encourage you to do so. It's only about 45 minutes. He has about 8 videos. And so you can watch them all in under an hour. You can watch them a couple times. And I promise you, it'll give you a great understanding of what we're looking at here and what we're trying to do. J Stores, there you go. Don't mess around and eat up the whole kitchen. Wait a minute. Oh, I lost my indicator. I didn't realize I had deleted one. Oh, here it is. Now I got to set it up again. Here, 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 here. Okay. There we go. It's like, what happened? I knew there was a bearish fair value gap that should have been just above where we were. Oh, that hourly wick. Yeah, we sure did. You're right about that. Mass Petrochem, what's going on? Good morning. Let's go to the 1 minute. We have the macro coming in a minute. I'm not sure. I never found them. I have no idea where they are. Clearly walked out of the office with them and put them somewhere, but I have no idea where I put them. And I usually only think about it when I sit down to do the session. I'm like, oh man, where are my glasses? I forgot to look for them because I only wear them when I sit here. So 1050 candle. Good service or swing break values or mitigation blocks to send price lower. Okay. Yes, I am. I am at home. ES did. Yeah, let's look and see which one is doing better. Yeah, they all have bullish candles on the hourly here, which is good to see for all the three indices. And you see the big bearish one on the dollar. They are at the bottom of the range. So these could just be retracements for lower prices later in the day, which is why you catch your breaker and you either get your RR 1 to 1, 1 to 2, or you look for a certain price point, whether it's 30 points, 50 points. I know Queen has her TPs set up at different intervals, 25 points and at 50 points and so on. So you figure out whatever system you like, backtest that system to make sure that it does produce those results. And in times like this, you take your profit when you get it. Uh, that's true. Never seen you taking a trade. Do you need to see me take a trade? What's up, Fuego? Not really how to pronounce your name, but it seems like, I don't know. If you're not getting value from the session, then I'm not sure why you're here. And marketing doesn't pay that well, just so you're aware. And just a quick question for, I'm not sure, yeah, again, NZ, did you take any of these trades this morning? Did you take any of the longs out of the breaker? Sweeping at 448 without a new breaker would continue to indicate above. Let's see. Exactly. Where's TJ when you need him? All right. I haven't heard from, I don't know. He had a couple comments before. I asked a couple questions and now I don't hear anything. Absolutely, HCE. That's exactly what I was thinking. The fact that you care already tells me everything I need to know. All right, no boundaries. I appreciate that. Any final questions or comments? We got 2 minutes left on the session this morning. We'll take a break for an hour and we'll come back at 1300 for the afternoon session. All right, look at that. Finally pushing out. So these entries over here are finally producing. Now it kind of gave you, it was close. It didn't get all the way. So you'd have had the market execution this one if you were getting in. But everyone who got in here and held, we're now in the macro period and it is starting to push. And it wouldn't surprise me if we sweep some highs over here. I'll pull the OTE over once again. It's still relevant here. Higher time frame price target. So it's the same things you look for when you look for an entry, right? So you're looking for areas that price may want to turn around because that's going to end your trade. So you're going to be looking for the same things. You're going to look for fair value gaps. You're going to look for key levels. Like you got the midnight open 8:30. We got a protected high on the 5-minute market structure. We already have identified on the 5-minute a bearish breaker. We had a push down. We had a break of liquidity on this one candle and then a closure below. So we got a bearish breaker already set up. It just it hasn't traded back to it yet. So it just ran away, closed below, and that was it. So so those are all things that are sitting above us that if you're in a long and you start seeing price move up, you're going down to the lower time frame and you're looking for a bearish type breaker setup on a low time frame, which would validate that it wants to turn around when it gets to a level, whether it's the breaker, the 830, the protected high, the New York high, the midnight open, all of those levels. When they get there, you start looking. Or you just pick a level and say, this is my TP, let the trade end, and then you watch, as opposed to trying to pick the tops, which is what a lot of people do, and it can get you into trouble. Yep. Yep. All right. Oh, there is TJ. All right. See you in the afternoon. All right, everyone. That does it for our morning session. We'll take an hour break and we'll see you at 1300. Take care, everyone. See you in a bit.